This video shows the basics of using financial performance data, a free online business resource provided by Innovation, Science, and Economic Development Canada. The description below this screen contains a link to this video's companion website. Financial performance data is a user-friendly reporting interface that lets us selectively retrieve and display data produced by Statistics Canada in their Small Business Profiles series. The source of the data is corporate income tax returns for about 1.8 million Canadian companies.
We can get to financial performance data by doing a web search. A link to the home page will be at the top of our search results. The home page is worth exploring because it contains useful information and links. However, the most important part of the page is the big blue button that enables us to create a report. The Create a Report button lets us select from a range of report parameters. We will probably need to create multiple reports in order to retrieve all the data that we need.
Our first parameter is the size of businesses based on revenue. We can choose between businesses with annual revenues ranging from $30,000 to $5 million, or from $5 to $20 million. The upper revenue range, $5 to $20 million, includes only incorporated businesses. The lower revenue range, $30,000 to $5 million, includes all businesses, that is, both incorporated and unincorporated businesses.
We can choose to create a report for Canada, or for any individual province or territory, but only for businesses with annual revenues in the $30,000 to $5 million range. There are no provincial or territorial breakdowns for companies in the $5 to $20 million range. We will probably want to create reports for both Canada and Manitoba, for comparison purposes. Also, because Manitoba is a small province, some industries contain only a small number of companies. If the sample of companies is too small, Statistics Canada will suppress data to guarantee confidentiality.
We can have our report include incorporated businesses, unincorporated businesses, or both, but only for companies in the lower revenue range, namely $30,000 to $5 million per year. If we choose the upper revenue range of $5 to $20 million, we will see only information for incorporated businesses. Since incorporated and unincorporated businesses submit different information on their tax returns, the report data will also differ. For example, if we want data on profitability, we must choose the All Businesses option. If we want balance sheet information and financial ratios, we must choose the Incorporated Businesses option.
We can base our report on the distribution, or ranking, of businesses by total revenue, or by profit margin. Each option produces a slightly different set of figures, so we should create reports for both options. In this video, we will use the default option, ranking businesses by profit margin.
We can have the data in our report expressed either as percentages of revenue, or as specific dollar figures. Percentage of revenue is the preferred choice, if we want to compare our own business projections to industry averages.
Once we have set our parameters, our next step is to choose the industry sector that we want to examine. We can do this either by browsing through the menu of industry sectors, or by searching directly by keyword. First, let's try browsing through the menu.
When we click on the Browse option, we are shown the first industry sector in the top-level industry menu. That is, agriculture, forestry, fishing, and hunting. The number 11 at the beginning of this line is the first two-digit classification number in the North American Industry Classification System, or NAICS. We can scroll down through the top-level menu by clicking on the Down button. Each item in the top-level menu has its own two-digit NAICS number.
Suppose that we want data for bicycle shops. Our first step is to choose NAICS numbers 44 and 45, Retail Trade. Our next step is to click on the Search button to see the options within this industry sector. When we click on the Search button, we are shown a list of specific retail industries, sorted by 3, 4, 5, and 6-digit NAICS numbers. As we browse through the list, we eventually come to NAICS number 45111, sporting goods stores, and 451113, cycling equipment and supplies. We can now select our cycling equipment store and click on the Create Report button. But before we do that, let's see how we can select an industry by keyword searching.
When searching a database, it's best to start with what we know. In this case, we know that we are looking for bicycles. However, when we search for the keyword bicycles, we get a no results found message. When this happens, a good strategy is to search for a broader industry sector, such as sporting goods. Here we have typed sport and retrieved all the industry sectors that have sport in their titles. We can see that sporting goods stores are assigned NAICS number 45111. When we search for this number, we retrieve a list of all the industries in this sector, including cycling equipment stores. We are now at the same point we stopped at a little while ago. We have arrived at the same industry, cycling equipment stores, by two different routes, menu browsing and keyword searching. All we need to do now, is click on the Create Report button, to generate our report.
And here is our report. It contains about 60 items, covering revenues, expenses, balance sheet data, and financial ratios. The report reflects our selected parameters, namely, companies with revenues between $30,000 and $5 million per year. Companies located throughout Canada. All companies, both incorporated and unincorporated. Companies ranked by profit margin. Report data in the form of percentages. And data for 2014. In fact, we have no choice about the date. The only report data available is for the most recent publication year, which is 2014.
We can change our report criteria by clicking on the blue button. We can also add our own expense and balance sheet data to the report. Clicking on this link opens up an interactive form that lets us input data. We can also save the report data to an Excel spreadsheet.
Since we chose the All Businesses option, our report is based on the tax returns of 608 bicycle shops across Canada. Of these, 497 are incorporated, and 111 are unincorporated businesses.
The 608 companies are ranked by profit margin, and divided into 4 equal groups, called quartiles. The bottom quartile contains the least profitable 25% of companies. Their profit margin is -0.6% and below. The lower middle quartile contains slightly more profitable companies. Their profit margin ranges from -0.6%, up to 2.9%. The upper middle quartile contains companies with a profit margin ranging from 2.9% up to 8.6%. The top quartile contains companies with a profit margin of 8.6% and up.
Each item in the report is linked to a glossary of definitions that explains the term, for example, cost of sales. Each column in the report represents a separate set of industry averages. The leftmost column gives averages for all 608 companies. The next 4 columns provide separate industry averages for each of the 4 quartiles. We can choose the column of averages that is most appropriate for our own business plan. Here, the cost of sales for all 608 companies averages 63.8% of total revenue. The average for companies in the bottom quartile is 67.4%. While the average for companies in the top quartile is only 57.9% of total revenue. The averages for the companies in the 2 middle quartiles fall between the bottom and top. This means that the companies with the highest profit margins have the lowest sales cost.
Our current report ranks companies by profit margin. But what happens to our report if we rank these companies by total revenue? The average cost of sales for companies ranked by total revenue is the same as for companies ranked by profit margin, that is, 63.8% of total revenue. However, when we look at the quartile averages, something strange happens. The cost of sales for companies in the bottom quartile is only 48.1% of total revenue, while the cost for companies in the top quartile is 64.6%. This means that the companies with the highest total revenue also have the highest sales cost, essentially the opposite of what we see when we rank companies by profit margin. In other words, high total revenues do not necessarily mean high profit margins. There are lots of possible reasons why this is true of our bicycle shops, but the question for us is really quite simple: which of these rankings should we select, to help us make the best case for our own business plan?
Our report covers 608 companies, but in fact each expense or other item in the report is based on data from only a fraction of these companies. The final column of the table shows the percentage of companies that provided data for each item. The percentages in this column do not necessarily affect data quality. Statistics Canada provides a guide to data quality in the form of letter grades that appear next to the averages in the first column of the table. The grades range from excellent, down to use with caution.
When we come to the balance sheet and financial ratios sections of our report, we see that most of the numbers are missing. Instead, we see a bunch of NAs, meaning not available. There are different reasons for NAs appearing in a report, for example, data being suppressed to preserve confidentiality when the number of companies in the sample is too small. However, in this case the reason is that we chose to base our report on all businesses. The 111 unincorporated businesses in our total of 608 do not have to submit balance sheet information on their income tax returns, so they have to be excluded to prevent the industry averages from being skewed. When we limit our report to the 497 incorporated businesses, the NAs are replaced with actual numbers.
The opposite is true when we come to the section on profitability. If we want to see industry averages for profitability, we must base our report on all businesses. Usually, we see profitability figures for the industry as a whole. These appear in the first column of the table. Profitability data for each of the 4 quartiles is more hit and miss. In this case, we see some profitability data for companies in the upper middle and top quartiles.
This brings us to the end of our video on financial performance data. To see the companion website for this video, click on the link in the descriptive note below this screen.